one.
Hello, everybody. As always, Mike DeGioia here with Dash Trader doing our weekly market recap. This is for the week of August 10th to August 14th. As always, I'm here with my co-host, Jill Malandrino, global markets reporter for NASDAQ. Hey, Jill, how are you?
Hi, doing good. Great to be back.
Yeah, and it's the end of the week. It's Friday, and not only that, but we're going on vacation next week too. So we have a little break for a little bit longer. So we will not be here, everybody, for next week. We will be back the following week. Next week, we're going to have some pre-scheduled vacation time, as is really pretty much the rest of the country and the world as we get here to the end of August. This is prime vacation time. Certainly been an interesting run up until now. So vacation much needed. So let's talk about the news. So we have our no stimulus deal in Congress. So even though Trump tried to motivate things and motivate the Congress to make an agreement by signing some executive orders, Congress still failed to be able to come up with yet another stimulus deal. What are your thoughts on this, Jill? I mean, is this just an ineffective Congress, or do you think that this is part of a broader plan? I don't know. Congress is off.
Yeah. Either way, it's not good. Clearly, both sides of the aisle are divided. I mean, the country is polarized, quite frankly, as much as it ever has been. So they can't agree on the dollar amounts. They can't agree what pet projects should be allowed in the stimulus bill and what shouldn't. I don't understand why it can't just be specific to the people who need it most. We don't need to include pet projects right now. That's not what this is about. If we were able to give tax breaks to corporations and billionaires, why can't this get done, right? So
Absolutely.
Everyone wants to tout the strength in the stock market. They want to talk about the consumer and how retail spending is improving. Well, guess what? Without stimulus checks, there's no retail spend. There's 28 million people that are going to be facing eviction, right? And they have nothing. So I can't believe they actually took off. I mean, their job is to support their constituents and work for the people. But I think it's going to be very contentious, certainly too. I mean, this is a horrible time for this to happen in an election year, but I mean, the whole thing is not a good situation. But it doesn't appear to be that anything's going to be signed anytime soon. And once it is signed, you still have to give it a few weeks for it to come on board.
Mm-hmm. Yeah, absolutely. I mean, this is just, I don't even know how the executive order thing is going to work with the executive order.
I don't understand that either.
I mean, does that mean, because as far as I know, Congress has the power of the purse strings. And if there's an executive order to continue this stimulus or do this stimulus, the Congress still has to, I mean, I don't know, they don't technically send out the checks, do they? I mean, should I be expecting another stimulus check based on Trump's executive order? I really don't know.
Yeah, I'm not quite sure why, and it's funny because Trump was very critical of Obama and the amount of executive orders that he had signed. And Trump has certainly has tried to employ that tactic. But this is why the founding fathers have checks and balances, right?
Yeah.
And as far as I know, we're still a democracy. We still follow the rule of law in theory. So yeah, I'm not quite sure how that's going to work. I mean, you have to, Congress has to agree on the spending. I'm not a legal expert, but just, basic civics, that's kind of how it works.
Yeah, it's just strange. The whole thing is just odd. Yet, even though with all of this oddity and all of this craziness, the market has reached the prior highs, at least. So first, the NASDAQ reached its prior highs, broke way through them, and has continued to go up and away. Now, finally, the S&P has pretty much reached its prior yearly highs. It's completely erased the entire COVID sell-off, which I find it's absolutely amazing, absolutely incredible. And then in the midst of all this, we have Tesla announcing a 5-for-1 stock split, pretty much following suit with Apple. Basically, Elon Musk saying, if Apple can do it, so can I. And basically now we have large tech companies filing for stock splits, which is kind of rare in reality. So I'd love to hear your thoughts on the market completely erasing the COVID sell-off, and of course your thoughts on Tesla and the stock split.
Yeah, the stock split story is certainly interesting. But when we talk about the markets reaching highs, and we can talk about the amount of stimulus that's in the system, we can talk about that it's a handful of stocks that are leading the way. Everyone understands that narrative. But Mike, where else are you going to put your money is really the
It's true.
question,
There's
right?
no other logical alternative.
Right. As of now, there's the U.S. markets are performing better than most other global markets. And it kind of is a little bit mind blowing. There's so much uncertainty from a geopolitical perspective and also economic here as well that it really is mind baffling. There definitely is a disconnect with what we're seeing in the economy and what we're looking at in the stock market. And yes, it's a discounting mechanism. I understand all of that, but I think, and we'll probably see it come to a head more if there's a delay of stimulus checks, if we start to see evictions play out. Wall Street has done well, but Main Street is continuing to suffer. So I really think that if we see this divergence, at least through the election, that's really going to be huge on the platform. And I think most people can understand that.
Yeah, absolutely. Now, getting back to Tesla and the stock split, I mean, what do you think we're going to start to see more technology companies splitting their stock? I mean, certainly Google is an expensive stock. Google could certainly do it. So could a couple of others. I mean, what are your thoughts on that?
Yeah, there's a couple of really good arguments that are out there. I understand the argument, and you and I spoke about this last week when we discussed Apple, that it makes it more appealing for the retail investor because it's less capital intensive. But that doesn't necessarily mean that anything has changed fundamentally for the stock. It's like having a $100 bill or 10 $10 bills. It's all the same.
It's the same thing.
Right. But you know what? Not everyone looks at the market all day like we do. And there's been an influx of retail traders and investors who have had more time to look at the market over the past 3 to 4 months. And they have been investing in a market that has gone continuously up, particularly in the stocks that have been doing well. So we need to educate them. Then you also have the argument, well, yeah, you can make it more available by splitting it, but then you can also do fractional shares, right? So what's the point of splitting it? To attract more investors? What does that do to the valuation of the stock? From a market structure perspective, it could help to improve, and there's some data out there that supports this. Our chief economist, Phil McIntosh, does work on this all the time, where eliminating so many odd lots with a share here or share there and making it more accessible and getting that round lot exposure could be good for spreads and, of course, for volumes as well. Any exchange clearly has a position on what that does for volumes. So there's a number of arguments that are out there from the institutional perspective, and you brought this up before we got online. They're going to want those shares, not fractional share, but full shares, because they want the voting rights. But if you have access to fractional shares and that's how you can get involved, a 10% gain is a 10% gain, right? But I think really the tell is going to be, and what the concern is how this impacts valuation, because nothing has changed fundamentally with the companies. And actually, I forget who was telling me that I think that top 5 or 6 stocks combined market caps like $5 or $6 trillion. That's more than most GDPs, I think, with the exception of ours in China.
That's crazy.
When you think of it like that, it's shocking.
Yeah, it's kind of insane. The other thing that I thought was interesting is that fractional shares don't have voting rights. So from an institutional perspective, the one benefit of doing an actual official stock split, yes, even though it does represent the same amount of value, is that it does give you voting rights by owning one full share. If you're an institution, you want to have your voting rights. That way you can have an effect on the company if there is a vote or something important related to the board. Most retail investments don't care about voting rights, so their fractional shares are 100% fine. They just want to participate in the growth and the value. So on that note, let's just jump to the markets and take a look at some of the charts. As you can see, this is where we were on the QQQ, on the NASDAQ. Let me just get my laser pointer here. My laser pointer shows where we were right before COVID, then the whole COVID pandemic, stimulus gets put in there at the end of March, and then blast off. We completely retraced in basically 2 months back to the prior highs on the QQQ and the NASDAQ. And then, of course, we've broken out and continued higher, although it does seem like we are starting to show some signs of of possibly running out of steam on the technologies in the technology sector, and I'm going to do a little bit more in-depth analysis of that in a few seconds. But yeah, we certainly have made a tremendous run on the Nasdaq, but it might be showing some signs of faltering. What are your thoughts on possible faltering on the tech giants? And just seeing that maybe this rally is starting to run out of steam a little bit on the QQQ Nasdaq side of things.
Yeah, Mike, it's interesting. We actually had Brian Joyce, our chief technician at NASDAQ, on with me yesterday, and he shares the same sentiments. Consolidation is certainly healthy. The NASDAQ 100 is up, as of yesterday, 65% off the March 23rd lows. To see some pullback, to see some consolidation is not a bad thing. I think when you look at the market overall, the concentration in where the leadership is coming from is a bit concerning. And I really feel like once you start to get the financials, once you start to get the energy names, and when you have more of a broad-based rally and start to incorporate some of the small and mid caps, then I think that will suggest to more of a solid recovery. But because you're not seeing that happen in those older economy stocks, it suggests to me that there's still a lot of uncertainty out there. So think about it. Do you want to put your money into, I don't know, a smaller cap energy name that probably is levered to the hills, right? Or put it into a stock that you know that's going to be around, that is driving the modern day industrials,
Yeah.
like
Your
an Apple, like
your
Microsoft.
Google,
And
your
I'm not just
Facebook.
saying it because they're NASDAQ 100 stocks. It has, has nothing to do with that. But it might be a great trade for you. It might be a great trade, and you look for these opportunities all day long, and you trade the trends. But I think longer term, if I had $100 to put here or there, I certainly would look at the newer economy stocks.
Yeah, I totally agree. On the S&P, we can see that we basically erased the entire COVID pandemic. I mean, it did take longer. It did take 1, 2, 3, 4 months to get back up to the prior highs, but the S&P finally did it. Now, I mean, definitely declining volume. The volume is completely petered out on the S&P. That's not uncommon going into the end of August. We tend to be, the last 2 weeks of August tend to be the lowest volume, one of the 2 lowest volume times of year. The other low volume time of year is between Christmas and New Year's. But at end of August, as kids go back to school in much of the South, and as people go on vacation, getting their last vacation in, tends to always be a low volume time of year for sure. On the DIA, we have a top and a double top, and we pretty much have not wiped out the COVID pandemic, sell off, but we have made a tremendous rally on the DIA as well. In fact, it seems like the DIA and the Dow really only started rallying significantly in the last 2 weeks. We've really made some tremendous moves up in the last 2 weeks on the diamonds, on the Dow 30 stocks, which is showing some life and vitality coming back into the old economy stocks. Any thoughts on that? Do you have any reason that the old economy stocks, you think that maybe, possibly that's because tech's petering out and some of that money's rotating into the older economy? It's just love to hear your thoughts.
Yeah, well, I think it certainly is, certainly in the short term, a rotation trade, and also not to front run or anything, but gold, we saw, you can almost correlate it this way. So the dollar made somewhat of a comeback. The gold trade certainly was a bit extended. You started to see a little bit of recovery in those older economy stocks. So it's not a surprise to see a safe haven asset like GLD or silver, for that matter, pull back a bit. I mean, it was a fantastic trade. If you look at it on a longer term chart, it might tell a completely different story. But I think in the near term, that's really what you're looking at. And who knows? I mean, we still have to work through the inflation trade. We know interest rates are going to be low for a while. We don't know what volatility is going to look like just yet. What are we, like 80 days away from the election? I'm sure volatility will certainly pick up. You have to remember, too, the election always takes place in third quarter earnings. That really kicks up in like second week of October. So you're still kind of at the tailwind on November 3rd. So there's going to be a lot coming at us once we get through, the middle of September.
Absolutely. No doubt. Gold was a tremendous breakout, tremendous run. I mean, technically almost perfect. I mean, if you measure this initial move, the consolidation, and then the breakout, and then now this pullback is pulling back to the area from which it broke out, which is technically almost perfect. Incidentally, on this chart that we looked at on the Nasdaq, if the Nasdaq and the QQQ did pull back, the area that you'd expect it to pull back to at the most or consolidate down to is at least the point from which it broke out. So you usually say when something breaks out, it'll pull back to the point from which it broke out from, so that it'll go back to this level of right around here, which is around 240, somewhere in that area. So that would be actually totally healthy from a market. It'd be bullish and healthy from a market perspective to have a pullback such as that. On gold, the breakout level is around 170. That's that area of 170. Now, it could certainly put in a bottom here and resume because there's certainly still a lot of dollar uncertainty and a lot of dollar weakness. In terms of Apple, I mean, Apple broke out on its earnings, did additionally well with the whole stock split, and doesn't look to seem like it's even taking a break. I mean, tremendously profitable company. I mean, nothing seems to be stopping Apple at this point. Your thoughts on that, Jill? You think anything that you could see that could potentially stall the ascent of Apple?
Well, looking at that chart, it's kind of hard to say. Yeah, it's a gorgeous chart. I mean, it keeps
just up and away.
Yeah, and it's breaking through those key levels that you were talking about. So from a technical perspective, it's kind of hard to fight that tape. I don't know if there's some juice in there with the stock split, probably. But I mean, I wonder if you can call it a back to school trade. That might, I mean, everybody has to set up their either home offices
or I don't know. I really don't.
Yeah. You know, and there's also been a lot of, it seems to have been pretty heated up over the past week or two about Apple and their cash position and what they could potentially do with that. I don't know if that's exciting a few people, but that's a hard
tremendous cash position. Yeah. I mean, it's like, I mean, it's just like astronomical. Yeah, so I mean, the only thing I could say as a potential on Apple is that from a technical perspective, it's extended. The stock is incredibly extended, and usually there's some kind of mean reversion at some point. But you know, right now, prices above moving average, prices above, you know, prices above all, you know, all resistance level. I mean, basically, it's a blue sky breakout until they split their stock. I mean, it is what it is. As far as Tesla, I mean, Tesla's chart is very similar to Apple's in that it's up and away. And they're splitting their stock at a time when the stock is at all-time highs, and I mean, you couldn't do it at a better time, you know, from that perspective. Also with Tesla extended, but we've cited many reasons why Tesla just needs to be in every portfolio. If you're going to try to beat the benchmarks, if you're trying to beat beta, and the beta is the indexes, and now Tesla's part of the indexes. I mean, you basically, Tesla has to be a part of your portfolio. And they've benefited from this tremendous move up in the broader indexes. So Tesla, very, very much similar situation as Apple. So it makes sense that they're actually following suit and doing a stock split. Next one, Amazon. So I really kind of call this, you know, there was back in the old 1950s and 1960s, we used to say, so goes GM, so goes the market. I think that today it's as goes Amazon, so goes the market. And I think that probably could be said also for Apple. I mean, Apple and Amazon seem to be the two, you know, juggernauts that are unstoppable. Amazon, though, on the technical chart, seems to have put in a number of tops, 1, 2, 3, 4. And I think that whichever way it breaks from this consolidation, which is a very interesting consolidation because it's getting a little bit long in the tooth. When a consolidation starts to get too long in the tooth, it has more of a likelihood to break down rather than break out, which is interesting because Amazon has been such a phenomenal performer. And that could be potentially some bearish signs that the broader markets might be ready for a pause or a consolidation, which you and I both agree is very healthy. On Google, we certainly see that Google being the weak man of the tech giants that are all super strong. So he's the weakest of the strong men. Well, not weakest, because I think that role goes to Netflix. Google has put in a kind of a head and shoulders pattern. It's rebounded back up to its neckline break area, but certainly has not performed the way Apple. It looks a lot more like the Dow or the S&P's chart than the Nasdaq's chart at this point. Certainly, Google has not performed the way the other tech giants have. Then we have Microsoft, which I think some of the excitement over the TikTok deal has kind of come out of the Microsoft stock. What are your thoughts on Microsoft or Twitter buying TikTok and this whole TikTok controversy? We
Oh,
spoke.
I think, yeah, I mean, we spoke about it last week, and I think the data concerns around it are really interesting. You know, the younger generation that uses these kinds of apps, they're not as concerned about
They
it.
don't
Like I
care.
said,
They
well,
just don't care.
they had the third largest TikToker on, I think it was CNBC last week, and he said that he's like, we don't care. We know that
They
now.
just want to groove.
Right. Well, I mean, of course, there are the concerns around other governments using our data. Like, I understand all that, but I do want to mention something about Amazon really quick. And when we look at it in the context of the Nasdaq 100 and these other stocks that are where the concentration is, even though, so Amazon is a consumer stock, it's a technology stock. We associate it with online shopping. Believe it or not, there are 17 other companies in the online shopping space that are outperforming Amazon year to date. And that's why you have a lot of these thematic ETFs. I have Amplify ETFs with iBuy. They were on the show earlier this week, and they isolate it where it's online only. So it's not everything in the Nasdaq 100. If you look at cloud ETFs relative to the Nasdaq 100, those are far outperforming the index itself. So
security as well, internet security.
Exactly. So while we hear about these same names all the time, and we're worried about overextension, there still are other parts of the market, those sectors that are contributing to it. So we think of Amazon. I mean, 17 other companies are outperforming Amazon. So I don't think we need to get like too crazy about 5-6 stocks or leading the market. I understand with weightings and everything, but there are other areas that are performing too.
Yeah, I do think that the part of the reason why we're watching these closely is that these big, they call them Fanga, whatever you want to call them. They are probably the ones, the leaders have led us into this market rally, and they'll probably be the ones to lead us out. If it does start to falter, the leaders will probably start to show weakness first. And they'll probably be the ones as a leading indicator to see if the market is faltering and going to roll over and go down a little bit. But like we both said, even if it did go down, it would still be healthy. So,
yeah.
So we went through Netflix. So yeah, Netflix is the one that is certainly has a high and then a lower high, which is looking like a rejection and possibly could break its trend line at some point in the near future. So I think that certainly Google and Netflix are the first two relatively weaker FANG stocks, and certainly Microsoft could go either way as well as Amazon. So like in last week, we only had Netflix and Google showing any signs of weakness. Now Microsoft is showing a kind of uncertain chart. Amazon showing an uncertain chart. What I'm starting to see is confluence of more bearish charts among these big five giants, with Apple being the strongest. And, obviously Tesla's not one of these five, but also Tesla being very strong as well. But we're starting to see a little bit more increased chances of bearishness in the tech sector. Not bearish, or just neutral to consolidating and maybe taking a break. Maybe exhaustion would be the best word.
Mm-hmm.
So we'll keep that in mind, and we'll continue to monitor that. And you'll certainly hear about this, further in 2 weeks when we come back. So on that note, I just want to just please remind everybody that there will not be a market recap next Friday. That's on 8/21, but we will be back the following week on 8/28. That's Friday, 8/28. You guys can always check us out here on the DAS Trader Pro channel, where we'll continue I'm going to be doing some more educational videos. I'm going to be doing a series on options trading and talking about options and options pricing, which I think that certainly learning a little bit about implied volatility and volatility going into this election will be a good time to learn about that. So those new educational videos will be posted on the DAS Trader Pro channel. So certainly subscribe to our YouTube channel, DAS Trader TV, and of course the YouTube channel for DAS Trader Pro. You should all follow us on LinkedIn and on Twitter and on Facebook, as well as Instagram. We have all kinds of great things being posted on Instagram in terms of my link to my videos are on IGTV. And we also have on Instagram daily trading tips on Tuesdays and Thursdays, as well as a market outlook that we do on Monday, Wednesday, And then, of course, we just tell you what we're doing on Friday in terms of the week ahead, etc. Get ready, guys. Another #1 Best Trader competition will be announced shortly. And of course, we always love to have you all participate in our #1 Best Trader competition. And finally, Jill, the week is
Yes.
over. Me and
It's
you,
over.
we're done for the week. It's Friday. Enjoy your Friday. And certainly you and I will both be enjoying our holiday week off. So
Yeah,
thank you so
we
much for
definitely will
being
be.
here as always, Jill. It's great to see
All
your
right,
face
thanks.
at the end of the week. And I look forward to seeing you in 2 weeks.
All
Hopefully
right, you got it.
again.
Yes.
All right.
All right, take
Bye-bye,
care,
everybody.
everybody.
Goodbye. Thank you very much. Bye-bye.